Hello guys. I just got a comment from about 15 minutes ago from Tabang Mashilu. So the guy asked me about how I draw my zones. So how you draw them. I always tell you about drawing the nearest support and the nearest resistance. So in his question is asking that when looking for the nearest support on monthly, so he's talking about this chart. We'll come back to it just now. So on monthly, you used the nearest previous bearish candlesticks, but when I was checking for resistance, so this is what I used for support, and then when I was doing the resistance, I used the candlestick that created the highest mark or the higher high. Is there a specific reason why, or was that purely from experience? No, it's not really from experience, but because, and in his follow-up statement, he said maybe there's a video or videos that you made about top-down analysis that look at each time frame as to like what to do and what not to do, and how to spot correct and high probability support and resistance. So this is where you might be getting it wrong. There are videos here. These are the videos that, so I made this video so that I just bring you the videos that you can check that will show you how to perfectly draw these zones, how to identify them, and how to draw them. So but I'll just quickly draw one on the same chart and explain why I did that. But make sure that you watch these three videos, this one, and the third one is about the 3 steps as to how to identify and draw and stuff like that. So these three, so if you check out these 3 videos, they should sort you out as to like how to identify them. But when we are marking the zone above and the zone below, it's different to, because what you are saying here is a different story. How to optimally spot correct or high probability support and resistance. We don't care about the high probability or low probability. This is an area of support, whether it's high probability or not. So the high probability one is only a component that we bring in when we are thinking of taking trades. So if we don't think of taking trades the same way, when daily is going up and you execute on your H4, as much as that is a high probability setup on daily, the fact that you're coming from daily, but if you hit a H4 area of resistance, that's H4 area of resistance, even though it's not high probability because it's fighting against the daily, but it's the resistance. So that's why when we are marking regardless of whether it's high probability or not, because we are just marking the potential area of resistance above and below so that we know where we are going to exit. But we are not, because this one is more like high probability. We only use them when we're saying now this is what we can use to trade, but marking, it does not matter whether it's high probability or not. So here, this is what I can just give you in brief to say this is how you mark your levels. So when the price is moving up, and you're trying to mark a support, or in this case, let's just give the support and the resistance. When the price is moving up and you're trying to mark the support, the normal support that you can have is this. When the price does this, this is just the standard support. You support is there, and when the price does this, going up, and then it turns like this, this is your standard resistance at the peak. So like what we had here, this was the standard resistance, this is the standard support. You see that? So but that's not always the case. Those are not the only areas where you can find support and resistance. Sometimes even in between here, you can have areas of support or resistance even without the price doing this or doing that. So that's what I used with this one. So that one, the way you identify it is that the price will be moving up nicely, forming one like the candlesticks in that direction, but it has like a pause. It pauses, like a market pause. The market pause, we use that to mark as our, if we're going up and we have a market pause here, this will be our support. Yes, our support. If we are coming down and we pause here and then continue, this will be our resistance. We can trade it like this if the rules allow us to trade. But I just wanted to show you that where you are finding the area of support, it can be support or resistance. It can be the normal ones where you're finding it at the top, or then support where you're finding it here. So this, when we're having stuff like this, these are the normal resistance, normal support, but we can even have some areas here in between, even without the price giving us the peak or the valley like that. So that's why here, if you check the price, remember when you're saying the zone above, the zone below, the way we identify them, we just move from the currently the price here is here. All you have to do is to trace the price back like that. So if when you're tracing it back like that, you find a pause here, it means this would have been your what, your resistance. But in this case, as I was tracing back, I didn't find anything until I even hit this. So it means the zone above that I'm gonna use is at the peak. You see? And then when you are doing when you are tracing what do you call this? When you are tracing the for resistance, you just mark like this. Currently I'm here. Is there anything around that? So if let's say there was the price had moved like that, it means this would have been my area of support. So you just move across until you hit the candlesticks. So that's the move that you're going to use to say, let me, like for instance, if let's say the price was here and the nearest support is here, you're just gonna move to the left like that, and then you hit the candlesticks, and then you start moving back until you find the nearest area of support. That's your support, which is the zone below and the zone above. That's how you do it. So that's why in this case the nearest area of support was at this pause here, the market pause. When you're going up, we had a pause there, and then the one above was just at the peak, which is the normal one, but here we had a pause. So this is another zone, this is another zone. I hope it makes sense. If it doesn't, I don't want to make this video too long, because if you want more information, this is where I went into details. This one I even showed you how to draw them, how to mark them. You can watch this one. And yes, I think you should watch them in the sequence that I posted them. So start with the difference between the support, the level and the area coming, and then after that, if you watch this one as video number 1, it will tell you why it is not advisable to use to mark levels, but rather mark it as an area. And then when you agree that it's best to mark it as an area, then that's when you move to the next video, which is video number 2. This week, you're gonna watch it as video number 2, where it will show you how to mark that area, that you said you're gonna use. And then video number 3, this is more like just giving you steps as to how to identify, how to mark it, and also how to plan trades around it. So this will be the last video. So this is sort of a recap of all those 2 videos, but start with that one. This will be your last video. Then after doing that, when you are coming back to the same video that I made now on gold, you'll agree that, okay, the nearest resistance is this and the nearest support is that. Then that's it. So the last thing that you said, where you said high probability, that one is where you are thinking of taking trades. Here when you are marking, you're not taking trades, you're just marking to know where the resistance is at and where the support is at on my higher time frames. And then taking trades, it happens on my smaller time frames in my sequence. That's where you'll be like, on my smallest time frame on my sequence, the trend is going up, and on my high time frame we're going up. So if my smaller time frame is going up, let me mark my support, and then I'm going to buy from it. Then that's where you'll be, this is the nearest support. Now, does it worth me taking trades from it? That's when you'll assess it 2:1 and all that. If it doesn't have that, that's when you're going to skip it and say it doesn't have high probability, because that's what you're planning to trade. But it doesn't change the fact that it's an area of support. You see, I hope it makes sense. So I'm gonna end it like that, and then just make sure that you visit those 3 videos, and then I'm telling you, by the time you watch this video, you will see that, okay, now I see. So it's very easy to spot this area of support and resistance on your chart if you know what you're doing. All right, I'll see you guys in the next one. I hope you answered, my guy.